I'm David Lombardo, and this is WCNY's The Capitol Press Room. About 3 months after student loan servicers turned down an invite to testify and take questions at a hearing in Albany organized by State Senator Zellnor Myrie, the Brooklyn Democrat announced in late June that he will be launching a formal investigation into one of the country's largest federal student loan servicers and a major player here in New York. The senator has indicated the focus of the investigation is on the incentives for companies like the Missouri Higher Education Loan Authority, known as MOHELA, which may actually promote an interest in customers defaulting as opposed to repaying their debts. Additionally, the review will examine whether there is enough disclosure for borrowers and if the state can step in to provide more oversight. For more on this issue, we're joined by State Senator Myrie. Welcome back to the show, Senator.
Great to be with you, Dave.
Well, back in late June, you released a 56-page interim report on this issue, which to me seems to revolve around this thesis that the bundling of student loan debt into securities similar to the mortgage-backed securities that contributed to the Great Recession of 2008 have created this perverse incentive where there is more money available to the interested parties if loans aren't paid back as the result of federal guarantees on returns. Generally speaking, what information do you want from MOHELA that you think might confirm whether this situation just smells bad and isn't necessarily illegal or actually is criminal in nature?
Let's pull back the curtain a little bit on this for your listeners, Dave. Most people think that the loans that you borrowed from the federal government, that what you were paying back on a monthly basis goes back to the federal government. That's how traditional loans work. You pay back the lender, and as you do better, the lender does better, they are made whole. But for most New York borrowers, in fact, for most borrowers across the country, the loans that they are paying back every month do not go back to paying the loan, but has already been sold to a trust who then sells it as a bond, who then gets invested by many people on Wall Street and across the business spectrum. And so what you are paying back, it actually does not go down to the principal and all the things that you might expect. And there has been an entire industry set up around these securities that are backed by your student loans. In between all of that is a servicer like MOHELA, the one that is actually sending you the bills, the one that is supposed to pick up the phone and answer your calls, the one that is supposed to help you get into a more affordable payment structure. What I asked for back in December from MOHELA and other student servicers was simple information. Tell us how many New Yorkers you service. Tell us what the calls look like. What advice are you giving them? How many have taken advantage of the affordable payments? And MOHELA refused to answer even those very basic questions. So at minimum, what this investigation is hoping to get is an answer to what is a pretty, on its face, a simple question. And in fact, a question that MOHELA has answered to other jurisdictions, but has refused to do with New York. To me, that arouses the spidey senses and why I think it's important that we get more answers.
Well, how would you then answer the critique that this is just a fishing expedition, that there is no there at this point, and you're just looking for criminal activity? You're looking for them to hand over something incriminating, for example.
I think that the basic questions that we have asked do not suggest any criminal activity. A question around how many borrowers you service in the state of New York is a very simple question. When it gets more complicated, and what we have seen, not just from my own preliminary report, but what has been reported by others, whether that is the Inspector General for the Federal Education Department, whether it is the Fed, who just recently reported on the obscurities in the asset-backed finance securities world, are the incentives that drive a servicer. MOHELA and other student servicers do not answer to the borrower. They answer to the investors in the trust where those student loans and those assets have been pooled. I'd like to know whether you answer in a full way for individuals who are struggling, who are in distress, if that is better for you, or if that is better for the trust. And those questions, to me, are legitimate legislative questions. They are inquiries into what needs to happen. Back in 2008, and this is not the same exact context, but I want folks to think about this for a second. There were incentives that were misaligned. In the mortgage-backed securities industry, those servicers only answered to investors in very convoluted ways that left the mortgage holder, the actual person living in the homes, without real recourse should things go bad. Everyone in that structure pointed to somebody else. There were criminal penalties after 2008. Some might argue there were not enough, but the entire system was changed by Dodd-Frank in 2010 because these structures were wrong. We're seeing some of the similar patterns here in the student loan context. And what is different is that when you default as a borrower, and I'm a borrower too, I got student loans, I got six-figure student loans. When you default, the federal government pays Mohila and the trust and the investors back 97%. Those incentives are misaligned. I think it is a legitimate question to see how that affects borrowers across the state.
Well, as you just noted, Mohila has been willing to share information with other jurisdictions, and here in New York, their operations are licensed by the New York State Department of Financial Services. So, is there any indication that the state regulator has any of the answers that you might be looking for?
DFS could have some information on this. There might be some other agencies that could weigh in. We had the Department of Financial Services come testify before us at the white collar crime hearing back in March. We had their student loan representatives speak to us about some of the practices there, but I will note that that is strictly in the regulatory context. And when we are talking about securities, that then sometimes takes it outside of the civil context and invites, I think, legitimate questions around whether there is activity that might rise to criminal activity or that should be categorized as such. The Securities Exchange Commission on the federal level oversees the civil side of securities, but we understand that the federal government, whether it's the Department of Justice or U.S. Attorney's Office, also can utilize federal criminal statutes to go after some of what we see in the securities industry. I'm questioning whether that same power is necessary on the state level.
So you've gotten a response in writing from Mohila and also during your hearing back in March from an association that represents the group, which is that they are contractually obligated to basically defer on your questions and refer them, I believe, to the U.S. Department of Education or potentially a new oversight agency starting this summer. What do you make of that response? And is there any validity to that?
I was skeptical of this response when we received it in writing from Mohila. And for the viewers who did not tune in back in March to the white collar crime hearing, I asked the representative specifically whether or not you could tell me simply whether Mohila services borrowers, how many borrowers they serve. And his response was that we can't, you have to go ask the education department. Okay, that on its face is not terrible. But then I asked the education department for this information and received zero response. In fact, to this date, I have not received a response. And mind you, this is the department that up until 3 weeks ago was responsible for the $1.7 trillion student loan portfolio. Every servicer has to run through the education department, but the office within the education department that oversees financing, that oversees securities, that oversees servicers, literally right now has zero employees. Not one was zeroed out. And so there's no oversight right now. And that to me makes me even more skeptical of Mohila's position that I should be talking to the Department of Education.
Well, I hope you have newfound sympathy for journalists who constantly get stonewalled by government agencies of all shapes and sizes. But I guess that's neither here nor there. That's my own beef. Why don't we talk about the S word, subpoena? As of June, it's my understanding that you hadn't used your committee's subpoena power. Is that still the case as we talk on July 23rd? And if so, what is the threshold for potentially trying to compel a response with your committee's subpoena authority?
So we have not yet issued a subpoena. We have been utilizing every other power at our disposal to get information in a voluntary fashion, but we retain the right and the ability to issue a subpoena. The legislative requirement to issue a subpoena has to be in pursuit of legislation. It has to be within the jurisdiction of the committee that is pursuing that legislation. And there is a long precedent around the legislature's ability to do so. I think that if we do not get answers, that is a step that is certainly within consideration and that is under discussion. And here is ultimately what matters. This is a kitchen table issue. Your loans travel from your pockets to the capital markets, even if you were struggling. And it could be the case that when you struggle, they make more money. When they come to collect, you have to pay. You have to answer them. I believe that they should have to answer us when we are asking them similar questions.
Why not simply pass a bill in the 2027 session that says licensure in New York is contingent on answering XYZ questions? And if you want to have access to the 19 million people that live in New York, they're probably going to comply.
This is what this investigation is about. It is in pursuit of every avenue that might be necessary to help rectify what we are seeing in the student loan industry, up to and including legislation around licensure. I think that it is important for us, if you are a regulator in this state, if you are in the attorney general's office or in the district attorney's office, that we have every single tool at our disposal to ensure that New Yorkers are not being taken advantage of. These are structures that don't just limit themselves to student loans. I began this entire investigation looking specifically at student loans, but what I have discovered since then is that this asset, like student loans, it has a similar structure to what we're seeing in credit cards, what we're seeing in the auto loan industry,
Mm-hmm.
what we're seeing in retirement annuities, in asset backed finance writ large. There are troubling patterns about the misaligned incentives, about who they answer to while you are in distress. I believe that we are either currently within or at the precipice of a serious distress profiteering regime that we have to correct, and New York should be at the forefront of stepping up for our constituents.
But just following up on that initial question, then, if we fast forward to January and you still haven't gotten answers, would you try to fast track or at least introduce legislation requiring some sort of transparency and disclosure as part of licensure here in New York?
I'm not only open to legislation on transparency and requiring certain requirements for an individual to operate in this state, but I think we should look at the entire gamut of legislation and powers that are available to us. What we see on the federal level is that if you have a scheme to defraud, if there is a structure that is unnecessarily profiting off of an individual's distress, not being transparent about that, there aren't only civil penalties available, there are criminal penalties that are available in that context. We do not have that analog here on the state level. So I'm open to considering that. But the purpose of this investigation, the purpose of the hearing, the purpose of me asking for information voluntarily was that we could do that from a position of knowledge, that we could understand exactly how the system works. We try to do it the nice way. We may have to get a little tougher.
Well, when it comes to oversight of student loan servicers in particular, putting aside all of the other potential financial landmines that are out there, are there limitations for the state, the same way we have sort of state chartered banks that can fall under the state's purview, but ones that aren't are kind of beyond our purview? And we see the same thing with different maybe health insurance issues. I mean, are there roadblocks that will ultimately tie your hands?
This is a great question, Dave, because it speaks to what the nexus is between state action and what is happening with servicers that operate across the entire country. And the answer to this is actually pretty revealing in that when you pay your loan, a loan that has been pooled with thousands of other loans, that has then been pooled into trusts, that has then been sold on the bond market, which has then been bought by investors, that entire plumbing goes through New York. In fact, it literally goes through Wall Street. There are structures in place that securities and trusts have to be registered in, and they do so under New York law. And that to me is a pretty straightforward jurisdiction on New York's ability to act in this market. But we also have put taxpayer money out as well. Our Higher Education Service Corporation, which is a public private benefit corporation here in New York that helps with financial aid, that helps with loans, they have paid out on these securities. They have paid into these trusts over the past 15 years to the tune of $5 billion. They got that reimbursed by the federal government, but this is infrastructure that rolls through New York. And most pointedly for Mohila, their contract as a subservicer with Navient, the ability for them to even do this work, within that contract, they explicitly say that if there is a dispute, that New York law will govern, not federal law, not in other jurisdictions, not Missouri, where they're from, not Navient's headquarters, but New York law. So that to me suggests that we have an important role in this state, not just to the borrowers here and to people who are struggling to make those payments and can't get the answers that they deserve, but this, in fact, is key to the entire securities infrastructure in the country.
This conversation clearly brings up, and we talked about it directly, the experience of the Great Recession. And there were a handful of people, well documented by Michael Lewis, who were trying to sound the alarm about this situation that was ultimately catastrophic for our economy. And you see parallels right now. But what we've also seen in the financial sector is that nobody wants to police these guys. The Great Recession in particular, I think, had, if any, maybe a handful of criminal prosecutions. And the sheriff of Wall Street has long since left public service here in New York. So how do you avoid being treated like Chicken Little on this when both parties, for the most part, have no interest in wading into this type of issue and looking at the books and asking questions that might disrupt the status quo?
Well, first, let me say that this is a personal issue. I
It
graduated
feels
into
like it.
the yeah, I graduated. Most certainly is personal. I graduated into the 2008 financial crisis. I have six figures in loans that I am paying back. And when we announced that we were launching this investigation, I got calls and emails from constituents who each had their own story about how they are struggling and they can't make it. The things that we are supposed to do, they tell you go to school. Okay, some of us can't pay thousands and thousands of dollars of tuition out of pocket. We do not come from those backgrounds. We had to borrow money in order to get our education. We did that. Then we went and got jobs, and we tried to get better jobs in an economy that did not allow for that. But we ultimately landed on our feet. And now we are trying to achieve the American dream. We want to own homes. We want to start families. We want to establish ourselves in our communities. But we are paying mortgage level loan repayments to our student loan servicers. And so this to me is something that I feel not just as a state senator, as the chair of the codes committee, but as someone who was going through it myself. Secondly, I think we would be making a very serious mistake if we were to repeat the inaction of 2008 and what we have seen post 2008. Affordability has become the big buzzword in our politics, but there is a reason for that. It's because people are, in fact, struggling. And it isn't just limited to student loans, it expands to almost every area of our lives. But we have to look at the infrastructure that profits off of that struggle. I think it is one thing to discuss why prices are high. We should absolutely address that. But when the prices are high, people do things to meet that high price and they borrow. And there are people that profit off of that borrowing. There are people that are making a lot of money off of people like you, people like me, who are struggling to make these payments. And I don't think that we should be half stepping our approach to getting answers to that question. I think that it is important as the capital of finance in the entire world for us to continue to do the things that I think produce a healthy level of production from Wall Street. But if we are seeing individuals or entities that are improperly benefiting from the struggle of most New Yorkers and from a lot of student borrowers across the country, we got to do something about that, and we got to do it before it's too late.
And do you have any partners in this endeavor at this point? Is the Senate Higher Education Committee chair on board with this? Is there some other entity, maybe the bank's chair, who's got your back? I mean, who are the Avengers in this team that you probably would need to take on this type of issue?
Yeah, my hope is that once we get to the end of this investigation and are prepared to put something forward publicly, that we could have the support of some of those key chairs that you mentioned. I held the hearing in March with the chair of the Consumer Protection Committee, Senator Rachel May, who has been a great partner in these efforts. And I anticipate that I'll be able to work with several of my colleagues on this issue. I have focused this preliminary investigation, the Mohila investigation, on student loans, but it is bigger than student loans. And I think that that is going to have support all across the conference. And my hope is that this investigation will yield answers first for all of the New Yorkers who deserve those answers. But then, secondly, that we can get some legislation that is, of course, going to require partnership, not only in the Senate, but in the Assembly, and hopefully getting a signature from the governor.
Well, Senator Rachel May will definitely be your ride or die until the end of this, but are you hearing any rumblings or concerned about jeopardizing, the money that the Democratic Party relies on? Because ultimately, all of this stuff trickles down into the party committees and, say, the governor's reelection, and this is big money we're talking about. So people have begun hinting at that about you, or said anything directly about these types of issues?
If they are not saying it to my face. I'm sure they will when the time is right. But I got to tell you very, very plainly, I don't care. This is potentially the issue of our generation. For many people in the millennial band, this is a pressing daily issue. And it's not just us. The reports from the federal government that just came out this week, in fact, there are 9.5 million Americans that owe student loans and that are behind. This is about $250 billion that they are currently in the process of defaulting on. And that age band of the individuals that are struggling keeps getting higher and higher and higher. So I think this has been part of the frustration that many people have had. I'm going to speak to the Democratic base for a second, that the Democratic voters have had with Democrats, that we talk the talk, but when it comes time to challenge institutions, when it comes time to challenge power, we do not do that. And we hem and we haw and we say, well, this can't be done and that can't be done. I think people are tired of that. People are tired of us cowering to institutions and cowering to big money and doing the things just because that's the way that it has been done. We have an opportunity in this instance to stand up and say, we're not just going to talk about affordability, but we're going to challenge the pillars that are standing in the way of really empowering most New Yorkers. That is a fight that I am willing to fight, that I am prepared to fight, and I'm not really thinking about what the political consequences may be.
Well, we've been speaking with State Senator Zellnor Myrie. He is a Brooklyn Democrat and chairs his chamber's Codes Committee. Senator, thank you so much for making the time. Really appreciate it.
Appreciate it. Always good to be with you.
Thanks for listening to today's edition of the Capitol Press Room. For an insider take on what's happening in state government, check out our Dispatches from Planet Albany show, available wherever you get podcasts or at capitolpressroom.org.
Join us again for Capitol Press Room, a production of WCNY Connected, Syracuse.